Srikrishna is Executive Director and CEO at Hexaware. The company reported earnings and the insurance vertical is getting a lot of attention. Some large cap peers have talked about sluggishness in the insurance vertical. That is important for Hexaware. So we started by asking Mr. Srikrishna what is their own sense as far as the insurance vertical is concerned.
Yeah, so insurance, there are two kind of different segments which each have different drivers. There's a healthcare insurance and then there is the life and the P&C, right? If you take a look at the life and the P&C, they are undergoing a fair bit of transformation and digitalization, right? All of them virtually are in a phase where they are transforming their core platforms to become more digital and become more agile. They are transforming their data. We describe this whole journey as a journey from data to digital. And so that's what's happening on the P&C side. So there's spend absolutely on the digital transformation, on the application transformation, on how they interface with customers.
So you also have a couple of holidays coming up. It's a seasonally weaker quarter. Any other reasons apart from that which could impact the second half of the year for Hexaware?
No, I mean the holiday season follows, which are very seasonal impacts. We're not seeing anything further than that.
Can you talk about other drivers apart from Europe and BPO, which you are focusing on?
Yes, so we've always been bullish on Europe, right? I mean, we had a slowdown due to the currency impact, and that's settled down right now. So we think Europe will continue on a secular path of growth. It is still under-penetrated, under-serviced by our industry relative to US. So we think there is headroom there for growth. In the geographies which we've been in for some time, there is headroom, and then there are new geographies where there's further headroom. BPO, has been, we think BPO business is absolutely ripe for disruption, right? The whole robotic process automation, the most established use cases are in BPO. So we really, automation is the driver for growth in our BPO business. We are able to go to existing customers, new customers, and say that we can knock off 30% potentially of the people work using automation and robots.
All right, my colleague Pankaj is here in the studios. He conducted the interview. Pankaj, why don't you take us through the rest of the chat?
Sir, if you could just explain us what is the sort of dollar revenue growth you did in this quarter, which is 3.5, but the coming 2 quarters, can you just break that down for us? What will be the next quarter like and the quarter after that?
So I think there's a different kind of view for the coming quarter and the subsequent quarter. The subsequent quarter we feel good about and we feel positive about, which is really the first quarter of the calendar year. The coming quarter has seasonal issues, so it's still on a trend of kind of volume expansion, but then there is a calendar issue, a number of holidays and furloughs. So we're seeing some higher than normal furloughs potentially. So it's a slightly different story for the current quarter, but subsequent quarters, including from Jan, present a strong outlook for us.
So the company in the last 3 quarters has added significant capacity in terms of headcounts as well as building training strength. It's impacting utilization. So why add such amount of strength when utilization rates are getting slightly lower?
So we are aware that our utilization has headroom. But we think if you push the utilization too high, especially for an organization our size, we're going to then constrain our ability to service demand quickly. So it's a very conscious effort to build capacity for growth.
So right now the utilization rates have declined by 300 basis points in the last 2 quarters. What is the normalized rate that you are targeting? Because you've done a lot of hiring, so the current utilization rate may not be the true picture of what essentially you are targeting.
The previous quarter to now, there's actually a dip of about, I think, 2% on utilization. We are at about mid-70s right now. I mean, 70 point something this quarter, and it was a little bit higher the previous quarter. We are happy in this range. So there's always going to be a little bit, plus minus 1-2% happening quarter on quarter. But we are actually quite happy in the range that it is in right now.
Margins did go up by 100 basis points as utilization tends to go up, as you just said. You think margins would also go on the higher side?
We've always said that the focus is on growth. That margins will follow. A lot of margin levers get uncovered with growth. We obviously had some tailwinds from rupee during this quarter, which helped us improve. That's not the only thing that helped us improve margin, but that was one of the factors that helped us improve margin. We're happy with where they are, but the focus is going to be on sustaining growth on a quarter-on-quarter basis. Margins will follow.
Enterprise solution grew by about 5.6%. I think we've spoken about all the other verticals. What's the growth rate over there? Last 2 quarters, it has been slightly subdued.
Yeah, see, I think enterprise services is a business which is one of the harder ones to demonstrate growth on a quarter-on-quarter basis for the whole industry, right? Because that's where the movement to cloud is most significant. So we're very happy with the performance. We're very happy with the fact that we grew a reasonable amount in that business. It is driven by movement to cloud. It is driven by the fact that there is new implementations and there's a lot of integration work between cloud and in-premise systems. That's what is behind that growth.
So the company has given an interim dividend of 2.25 rupees, which implies a 66 to 70% payout ratio. Such high ratio in terms of payout, will that be maintained?
Well, our philosophy has been that until we have no good use for the capital, it is better in the hands of our investors. So we want to return the capital when we have no use for it.
So thank you so much for taking out time for us and telling us about the Hexaware results and what do you expect in the second half of this year.